Higher tractor sales helped post a strong December quarter. Revenues went up by 36%, but profits surged over 50%. But the situation may change in quarter four. Domestic growth for tractors may contract to 3 to 5% from nearly 20% in quarter three, as per management commentary. To help us decode the quarter three numbers and to get a further insight into how they're expecting quarter four to shape up, we're now joined by the management of the company, Mr. Bharat Madan. He's here with us. Mr. Madan, thanks very much for taking out the time. Let's start off with that and the commentary that's coming in from the management. 3 to 5% in quarter four, sir?
Yeah, that's for the industry number which you talked about. The reason being because we are already sitting on a very high base number. I think last year we have seen in Q4 the growth rate was almost 49% for the industry. So, which was I think a bit of very high base if you look at the trend which we have seen happening in the industry numbers. So we expect Q4 probably will be slightly short, but probably we'll see the growth coming back again in Q1 next year.
What would the normal growth, what would the base case be? I mean, while you're saying that this is going to be tapered off, but the industry norm in terms of the growth in the segment?
I think overall for full year, earlier we were estimating the industry numbers will be somewhere between 12 to 14%. But now I think looking at the way festive season has gone, especially with the competition, so I think its cost numbers not really a concern. We'll still do better than industry. But overall, looking at the industry numbers, we think now the full year guidance will be roughly around 10 to 12%. And since we already seen 13% growth happening in the industry in the first 9 months, so Q4 will be a bit of correction, I think, which we are anticipating now.
So, this time around, I mean, while you've already spoken about the factors that have caused this sort of a dip, going forward, while you say that the volumes will normalize, is there anything that you're noticing within the industry right now which could actually challenge that number going forward?
I think it's a little bit early to say because we know there are a lot of uncertainties which are around, especially in the election year. So post-election, there will be some, I think, correction probably which can happen, some stagnancy may set in. And then again, we don't have the right monsoon guidance as of now. I think by mid-March or end of March, we get the first guidance on the monsoon, how it's going to be. That will also drive sentiment. Like the monsoon happens to be good next year too, then probably we can again see a growth coming in the next year. But which may not be in the double-digit category, but maybe high single-digit growth can still happen. But if again it's a below normal monsoon and the distribution is not good, then probably you can see some sort of correction may set in second half of next year.
Right. So for you particularly, while we've been looking at some of the other auto majors and particularly in the passenger vehicle side, the inventory numbers this time around have been on the higher side. The offtake therefore for them is on the lower side because of the already stacked up inventory with the distributors. Is that a little bit of a setback for you too?
No. For us, I think if you look at the work inventory, I think we are sitting on the lowest inventory level in the last 3 years now with the dealers. So we got only about 3.5 weeks of inventory now. So we don't see really a concern as far as we are concerned, really, as far as the channel inventory is concerned.
Mr. Madan, good morning. Is this change in the stance from quarter 2 to quarter 3 for the next quarter a factor of the NBFC financing or rural stress or a combination of both?
No, I don't think NBFC stress has been any issue really on the tractor financing process. We've not seen any bid coming in from any other financiers, especially in tractor business, though we've seen some bit of impact on the construction equipment side, but not on the tractor. So I don't think that is something which is affecting the demand scenario. But yes, there are certain pockets which are more rain dependent for irrigation. So in the south and western India, we are seeing some sort of pond floods coming, emerging, which is where I think we're seeing the weakening of demand happening. Though in our stronger market, the demand was good. Even we saw in December the same situation where the stronger market had a very strong growth at 29%. While with the south and western market, the competition was strong and actually degrown. So that's the scenario probably we will see coming up in Q1 too, and in Q4 again, I think this time. So we'll probably see continue to have good numbers coming in from the stronger market and now we settle in there. So this can actually drive our growth numbers.
Would the relatively higher base of quarter 1 and quarter 2 of the current financial year hurt the growth percentage numbers in the first half of FY20?
So, like I said, Q1 we are still expecting a good growth to set in. Maybe 10 to 15% growth is possible in the industry in Q1. Q2, I think it's a bit of uncertainty as of now. But like I said, just within the year of election, and then again with some issues around the monsoon, how it really happens. And typically Q2 is a softer quarter and the festive season again will be in Q3. So Q3 really will depend on how the monsoon pans out. So even if the monsoon is good, we expect Philly, since the base is already very high, there's a third year in sequential and the industry is growing at a double-digit rate. So maybe next year, Philly will see the growth coming in maybe in a single-digit number.
Sorry, am I just reading this correctly? 10 to 15% growth for the industry in quarter one likely, and Escorts, in all probability, as you have done in the past, beating that industry growth number?
That's right.
For quarter one?
That's right.
Okay.
So could you also give us a breakup in terms of, performances with regards to the equipment side, on the railway side as well?
So construction business, then in last quarter, we've grown about 30% in volume. So like you said, so there was some impact of NBFC financing issue, but some of the NBFCs actually delayed payment, and some of the deals which were issued are not honored, so which led to some slowdown happening in November. During the end of December, we again saw demand picking up there, and we expect next quarter should be which is normally the best quarter for the construction industry. We should see good numbers coming in Q4 for the construction segment. Though on a YTD basis in the first 9 months, we already grown 38-39% in volumes in construction side. So coming to railway, again, railway is showing pretty good growth. I think it's almost 43% growth now on YTD basis. Last quarter also it grown 37%. 34%. So we don't expect that there should be any slowdown there. We've got a very strong order book as of now. We talk about current position, we almost 500 crores plus of order book exists on the railway business side. So we think that in the next 13 to 15 months looks very secure business for us on railways.
What would the margin outlook be, sir?
So margin, we had given a guidance for 100 basis point improvement in this year. So the last quarter was a little bit of correction because of inflation issue which were there, and also some of the mix which we had negative on the tractor side, but we expect that will get corrected because now the commodity price softening up, so we don't expect that pressure will be there in Q4. So we hope, I think the Q4 we should be able to make up for that, and overall for full year we should be able to deliver on our guidance of 100 basis point improvement.
All right, Mr. Madan, thanks so very much for joining, and really appreciate you taking out the time and addressing your numbers with us.